Good afternoon, guys. It's Working, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollar. This is the 4-hour chart on Coinbase, guys. And Bitcoin's been sitting here bouncing right up top this $3,400 support that I pointed out last time, guys. It's really showing. I've been actually surprised that we haven't had a major move at this point in one direction or another. I pointed out this, what looks to be a possible falling wedge pattern, which typically that's a bullish pattern, guys. Now, as I said last time, that is, it's not the prettiest looking pattern at all. It's a bit forced on my part. I'm just trying to do anything I can to look at the bullish scenario, because right now things are looking rather bearish, guys. Overall, the overall big picture is and does remain rather bearish, guys. Volume is low. Where obviously the overall trend has been bearish and has been for a long time, guys. But this is a possible falling wedge that may get validated only with volume and by obviously a break to the upside. Now we are reaching the apex of that wedge now. This possible wedge now. So if it's going to happen, it should happen now. The one thing that bodes in favor of this being validated is the fact that we did have, as I told you guys last time, I thought that we'd very likely drop back down to a test at least 3,400. That did happen. For any of you that bought down here, remember it was up here. I told you guys to wait until it retests 3,400 if you're looking to enter into a position. It did. It dropped down here to about 3380, at least on Coinbase. Obviously, it'll vary depending on the exchange you're using, but we did have that drop down here, guys. If you did buy in this area, I told you guys to obviously watch this descending resistance line, the upper portion of this, what would be a possible wedge. It has respected that so far, so that does bode well for a possible validation of this descending wedge pattern, even though I'm not there yet, guys, because it could just very just as easily just meander here sideways for a little bit and just completely invalidate that altogether. But as of now, guys, it's been, if we kind of zoom in here, you can see it's been respecting that resistance line fairly well since yesterday. Around noon yesterday, at least UTC time, and has been unable to really decisively break above here at all. Now, if we break up by a wick, that's no big deal. But if we get a decisive break above, guys, backed by volume, that's going to really, really get my attention. If we do get a decisive break up, and again, if it is backed by volume, we could be targeting this zone right here between, right around, I would say, 3,600, right in this area here. And this area is going to be an extremely hard zone to overcome, guys. You can see that it's provided support and resistance in the past. It was support here, resistance here, support here, resistance here, support, and then it just fell. So this should provide a decent amount of resistance. We'll wait and see if it does. If price does break up above this 3,600 decisively and starts consolidating into this zone between 38 and 3,600, guys, that's going to be a rather bullish sign, in my opinion. I'm not saying that's going to happen. I'm just saying these are the kind of things you want to keep an eye out for. For now, it looks to me like we're going to come back down, possibly retest 3,400 again. If we come over here and we look at volume, volume is remaining very, very weak. In fact, volume is dropping off at this point. We're sitting at about 4.8 for the day. If we come over here and we look at the volume over the last 24 hours, let me bring this up here. Sorry, guys, my computer's lagging here a little bit. So yeah, if we look at volume, it was day before yesterday on the 31st, we were at 5.8. Yesterday, we were at 4.5. Today, we're at 4.8. So volume slow trickle down. If you look at that in combination with, let's look at longs and shorts, in combination with shorts, shorts have been falling off the board in that time. If we come over here and we look at longs, longs have been stacking. I mean, it's just actually very, very surprising how much longs have been stacking. We got this little drop off here, nothing too significant, but yeah, the pace at which shorts have been dropping and longs have been stacking, as I always tell you guys, market makers are going to look at this, especially in this low volume market. They can manipulate price extremely easy. And if you've got a bunch of long positions that are stacked, how do they make money? They make money by liquidating positions, longs or shorts. If longs are stacked and shorts are falling off, what position do you think they're going to liquidate? Longs. How do you think they liquidate longs? They drive price back down. So that would tell me, now again, I'm not saying that's going to happen. It certainly doesn't mean it's an absolute, but probability tells me that right now we're at least going to come back down, at least in the short term, and possibly retest 3,400, possibly even coming down into this zone here, 3,350, somewhere in that neighborhood. Now, if we do drop below this descending support line here, at that point, all bets are going to be off, in my opinion, guys. We could very easily find ourselves at 3,000, and 3,000 is a real possibility. If we zoom, in fact, just going to stand by one second, guys. I'm going to drink water. All right, pulling all the way back out to the weekly chart, guys. we can see how bearish this is. Obviously, this is an extremely bearish trend that we've been in for over a year now. We can see that price, when it did come back down here, it briefly broke below this plane here, which was sitting at about 3,600 on Coinbase. This was an extremely relevant zone at 3,600. Again, at least on Coinbase, it'll be a little bit different price-wise depending on your exchange, but the overall pattern on the exchange will be the same. So wherever this area is on the exchange that you're using, guys, we've broken below that now, and we can see that price, when it did break that plane, again 3,600 on Coinbase, tried to break back up, and on the weekly chart here, it's been unable to. In other words, there's been a strong resistance every time price came up. So what was support here started acting as resistance, which is an extremely bearish sign in this case, and we can see that as of now, it's even breaking back down to where it looks like, just looking at this chart here, probability tells me that we're going to come back down and retest this low being somewhere around 3150, again, on Coinbase. That'll vary depending on your exchange, but it looks like there's a good chance we're going to come back and retest this low. That low breaks down, it'll vary a very, very quick drop down to 3,000, possibly coming down to this zone here between 3,000 and 2,500. And I would expect this to act as a very strong support, guys. In fact, I told you last time, this is the area that I'm going to go in heavy, and it is. If we ever see sub 3,000, I will enter into a very strong position on Bitcoin. But I will have a very tight stop loss, probably sitting at around 2540 again on Coinbase, or 2550 again on Coinbase. Why? Because we can see, if we pull all the way back out here, guys, we can see below 2,500 there is just almost no support between 2,500 until we get down to about 1,200. And I pointed this out last time, guys. 1,200, this is a hard support in my opinion. In other words, if we do ever see this area, and I'm not saying it's probable, but it is possible, and if we ever see a $1,200, $1,100 Bitcoin, guys, or getting down into that neighborhood, these are where I will go in very heavy. By heavy, I mean about 95% of the money that I have allocated to buy Bitcoin, I will go in here between 11 and 1,200 with order stacked between 11 and 1,200. Why? Because we can see that this area here was a very strong resistance in the past. This goes all the way back to 2012, the end of 2012. Very strong resistance for many months back here. Then we had that long bearish market, and then we came back up, and again, very strong resistance between 11 and 1,200 until we finally broke above it. And when we did, it was magnificent. We went on that massive bull run that brought us all the way up to 20,000. Now, I would expect that to act as a strong support here if we ever do come back down here again. Again, I'm not saying it's going to happen, but it is a possibility, and I want you to be aware of it. This is the area I would expect to bounce between 3,000 and 2,500. But I'm not going to be unrealistic. I will have a very tight stop, as I said. This is the area where I absolutely will go in very heavy between 11 and 1,200, guys. Not to repeat myself, but I do want to stress. This is when everyone's going to panic. As I said on my last update, everyone's going to panic. Everyone's going to say Bitcoin is dead. Then when there's blood in the streets, guys, that's when you want to have a level head on your shoulders. That's when you want to have a plan and execute that plan, even though it's going to be extremely hard to do at that point. All right, pulling back out to the daily chart, guys, we can see that obviously price has been creating a lower low. Obviously, I can draw a little graph here, but you guys can see it. Price has created a lower low consistently. If we pull out and we look at our MACD, what do we have? We can see if they look at the exact same points, MACD has created a higher low each time. So we do have a little bit of bullish divergence. I know I pointed this out last time, guys. I take this with a grain of salt. I'm not saying that we are going to be going on that bull run, but if I look at this information and I combine that with a possible descending wedge here, that could spell a possible breakout to the upside. Again, the only thing that is preventing me from making that a solid call, and I'm not going to take that trade. This trade is a little too risky for my blood. But the only reason I say it's a little too risky is because, guys, as I pointed out last time, we have long stacking, shorts dropping off the board here. We have volume that is very low and is decreasing, and has been as those shorts have been dropping and longs have been stacking. So you combine all that together, guys, and that makes for a very difficult argument to say that it's going to break to the upside. That being said, I can't ignore looking at the chart here. We do have some bullish divergence there, and that would suggest a at least temporary break to the upside. Again, not saying that's going to happen, but if you did want to enter the trade, or if you did take that trade where I told you to buy down there when it dropped back down to 24 or 3,400, and it is sitting in the area now, what I would do if you're wanting to hold on to that, guys, if you bought down here and you're wondering whether or not to sell here now that it's sitting up at about 3,450, somewhere thereabouts, what I would do is I would take your investment off the table and let your profit ride. So in other words, if you're wanting to hold, personally, I would just sell and get out of the position because it's too risky for my blood. But if you do want to hold, take your investment off the table. So you're no longer playing with any money. You're basically playing with house money at that point. You've recovered your investment, and then let the rest ride. And where I would get out, guys, is right there at that between 35 and 3,600, probably 3,500, because as I said, this is going to be in a very, very strong resistance area if price does end up breaking to the upside. Again, it may break up and it may keep going, and if you want to hold, by all means, this is not financial advice. You do what you want. But if it were me, guys, until we have an established trend to the upside, I would be in and out of trades very, very quickly. I wouldn't be holding on to a whole lot. All right, coming in and looking at the RSI, one of the things I'm looking at the daily RSI is the fact that we've had this peak all the way back since September of 2018. The RSI has been unable to break above 5,600. We've had this hard resistance here. Now, we had a very brief peak right here where it just briefly popped up and right back down. But other than that, guys, you can see that the RSI, the daily RSI, has been unable to break above 56 since September of last year. And really, it was actually since... September of last year was the last time it was decisively above that zone. So why I point that out? Why do I point that out? I point that out because what's going to get my attention is if we can get this daily RSI to break up above 56, 56 on the daily RSI. If it does break above 56 and starts consolidating, in other words, not just a quick sharp break and right back down, but a nice solid break above 56 with consolidation. At that point, guys, I'm going to start to get I'll start to get excited. Until then, guys, I do think this is still going to act as a very, very strong resistance. And yes, there is such thing as resistance on the RSI. Excuse me, guys. I got to get a drink of water. It's killing my throat's killing me. Okay, sorry about that, guys. I had to pause the video real quick. So yes, there is a such thing as a resistance on an RSI. So one of the things, it's just another tool to have in your arsenal when you're looking at entering into any kind of a trade setup. All right, let me go ahead and finish this thing off looking at our moving averages and exponential moving averages. This is on the daily chart, guys. Actually, now we're on the daily chart. We can see that and get this so you can see it a little bit better. We can see that the Bollinger Bands are continuing to, or are constricting here. We can also see that the 55-day EMA is starting to converge with the 50-day moving average, as well as the 21 and 8-day EMA. Those are starting to converge here just a little bit. We'll see if that does continue. But all that does, or what that does, is that signal a possible larger move to come. Now, if I come over here and I zoom it into the 4-hour chart, we can see that that's happening to a greater degree. We can see on the 4-hour chart, guys, sorry, I didn't mean to grab that. On the 4-hour chart, we can see that the Bollinger Bands are absolutely starting to constrict. We can see that the 50-day moving average, as well as the 55-day exponential moving average, as well as the 8 and 21-day EMA are all starting to converge. And anytime you start to see this, guys, as well as the Bollinger Band starting to bottleneck, anytime you see that, typically you see a larger move. We saw that back here. We saw the moving averages and exponential moving averages all converging right here. Bollinger Bands were tightening, and we had that massive breakdown. We saw that back here as well, guys. We saw the 55-day EMA as well as the 50-day moving average and the 8 and 21-day EMA all converging right here. And what did we have? We had that massive spike up followed by a collapse. So we had that major move coming. What did we have? Excuse me. What did we have right here? We had all the moving averages all clustering in. We had the Bollinger Bands all converging here. Again, what did we have? We had a massive spike in price here. So that does suggest that we are going to have a larger move to come here. And that makes sense, because how often do you see things just kind of consolidating, moving sideways like this for as long as it has? Not very often, guys, especially when you see that disparage, sorry, guys, especially when you see the difference, I should say, sorry, I'm grasping it for words here, especially when you see that split, I should say, between longs and shorts. Shorts dropping, longs continuing to rise in that low volume market. That also suggests a larger move to come. And if we look at the longs rising and shorts dropping, that would suggest a drop is to come. Doesn't mean that's going to happen. Just means probability tells me, guys, that you want to be very, very careful, because we could see a definite break to the downside. Now, as I said, I've made a case for the break to the upside with the possible falling wedge pattern and that bullish divergence. So we are getting some mixed signals. But if I take away that falling wedge and that bullish divergence, guys, if I take those away, the overall pattern obviously is and has been for quite some time. We just have to again look at the weekly chart, is bearish. And you know it is even if we do see a spike in price here, that may be very, very short-lived. So until we get a decisive break up above at least this 36 to 3800 zone, preferably well above this zone here, which is going to act as a very strong resistance between 4100, or the top of which is at 4120. But until we at least get above 3800, guys, we are still in an overall downtrend, well, obviously, and we still will be even at that point, but there's really all signs right now still point to price dropping even lower. In other words, the trend has to get broken at some time, guys. There's no question about that. But until that break does happen, probability still favors to the downside, and I'd be lying to you if I didn't tell you that. So I'm going to go ahead and wrap things there, guys. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, would appreciate an upvote if you have enjoyed this content. Until next time, guys, please trade safe. Take care of yourself. This is Working, signing out.